Good afternoon. This is Chris Brecher with a Simpler Stocks free video for September 9th, 2016. So you can see it's about 11 minutes after the close. Today, the bond market was the tell. Look on the right and look what happened the second Draghi opened his mouth. And the bond market falling apart, and that pulled down the SPXs. This chart right here, I want you to realize I showed that chart before it happened. We'll get to that in a minute. But right now you have the ESs down 625. NASDAQ almost on its low for the day, down 32 points in here. The Russell down 460, bonds down 202, gold down a little because dollar had a little bit of a bid. Transports outperforming again, up 19, led again by the airlines. Not that they had a giant move, but they didn't go down, let's put it that way. So it showed a lot of relative strength. UAL up 68 cents in there. You also had in here, advanced decline all day was moderate. Only 270 more decliners than advancers. What was up? The banks, the biotechs, a lot of the material, the Monsantos of the world, the Netflix was up. A lot of different stocks up. So it was a real mixed bag. Looks awful right here, but I'm telling you right now, it was a real mixed bag. You have the SPX, like I said, down about 4 or 5 points. Sold off right on the close. It should be about a point lower in here. You have the German DAX down about 1%. Like you know, disappointment with Draghi in here. You have the VIX up a little, up 15 cents. Some of the grains going up, really not much going on at all. The big deal is the bonds here. We've been talking a long time about if the bond rates go up or bond prices go down, that if we broke this level around 170.14, we could easily go down to this 165, 166 level. That rise in yields, that means a sell-off in bonds, is potentially bad for stocks. The reason being is then you'd have an alternative to stocks if the yields are high enough. So one thing you got in here was obviously interest rate sensitive stocks getting slammed today, but you also got that the bonds, a lot of people are watching that. A lot of the SPX has been rallying because of a rally in bonds. And if that unwinds, we'll see, you can expect what could happen. The other thing we've been talking about on the premium site is that bear wedge. A lot of people, I had a lot of doubting people about that. Now they're not doubting me as much of what I showed on the 78-minute chart. Look at this 78-minute chart of the ESs. I've been showing this chart all afternoon right here. And I was saying that it's the quality of the rally from this breakdown. And as you see, we worked off the oversold, and this is an awful rally from the breakdown. This is exactly like the Google I showed yesterday. If I'm right about this, we easily could go to this support right around 2170. So definitely keep that in mind. That we'll be showing that. Another thing I want to show you in the premium side, we have a $7 30-day trial. And what I'm excited about in here is that a lot of the things I show have been panning out. A lot of the stock ideas have worked wonderfully. Anywhere from ALK going up to the ES is going down to RETA going up. These are all in the last week. These aren't day trades. They've been working intraday, over a period of days, and they've been wonderful. Other thing in here, on your what you get your email alerts. You get the chat room in the morning from 9 to 10 in the morning. And the reason I'm showing the email alerts where I post usually some index and futures charts at least 6 in the morning, usually about 6 stock trades and chart ideas. Today I sort of laid off of it because I was afraid what Draghi might say, and I wanted to wait till the live chat to go over them. And a lot of times the unusual option activity. The index and futures charts, I want to show you something really interesting. This is from this morning. Be careful before the ECB. Check out this chart I showed before the opening. Check out this chart I showed before the opening. That is what I posted this morning. Those are the kind of things that can make or break your entire year. Look at this on the right here on the left. And then look at the bonds on the right and the S&P on the right, on the left. Let me just show you what I mean in here. go back in here and look at this on the 78-minute chart. And now look at this. Notice anything? I posted before it happened. All right, now go over here, and we're going to do it on the left over here. We're going to go up to the SPX. We're going to go over to this chart. Notice something about when I posted this morning. That was here. So this isn't hindsight trading. This is as it was happening. This is when this was 21.85 up 125. It's now 21.77. Those are the kind of things you get on our site. You might say it's simpler stocks, though. Why are you showing this? Because you could apply this to the SPX, the SPY, the IWM, and then you can find bearish chart patterns and jump on those. On the converse, if you want to go and buy everything, this is a good reason to show you why you shouldn't. And that's why every morning in the chat and also on the email alerts, the first thing I post is index charts. And you should ask a lot of people the testimonials about how right on we've been with the index charts. That's always the key to finding your profitable stock trades. So I hope you've enjoyed this video. I will be with you tomorrow. Tomorrow should be a pretty wild day. So everybody have a great night.